All right, everybody. Good morning to the YouTube gang. Hopefully you guys can hear me. I always do this testing thing before I start, but hey, we got Isaac in the building. Mary, William, what's going on? Good, happy Sunday, everyone. Good morning to the YouTube family. Oh, that's not the one I'm looking for. Hey, we got all right, we got everyone coming in. Someday, hello, Connor. Yes, sir. Mo, how are you doing? Diet Coke. Diet Cocaine. Oh, I see. I think your name is Diet Coke on Discord. How you doing, man? Dylan, Zol, Daniel. Chilling, man. How are you doing? Mo, you'll see something interesting. Good morning, bro. Masood, good morning to you, my friend. What's up, family? Capo. Aziz, clear Sunday. Yes, clear Sunday. Nasser. Walaikum assalam, welcome, man. Mary, how are you doing? And my boy Key. What other stocks are you looking at? Yeah, we'll talk about it. So I actually have Rocky with us today. He's going to be doing his technical analysis. We're on Google Meet, so hopefully you guys can hear him. So we'll have him talking just a little bit. But I just wanted to say what's up to everybody before we get started. We're going to do a live today for about an hour. My goal is to not exceed an hour, because I just have some errands and things I got to finish for the day. But without further ado, let's go ahead and get started. So, of course, as everyone has been asking, and you know, the big stock that we cover on this channel is Zometica. That's really the reason that I know people started following the channel, was because they wanted to get more insight. But guys, you know, we saw it happen. This week was a pretty tough week. Let me make my screen a little smaller so I could be, you know, less of a burden on the screen so you guys can actually see. There we go. We'll make myself a little small. So yeah, Zometica, guys, this past week was such a red week. As you saw, it pulled back almost nearly 37%, 36.1%, got down to 143. If anyone joined me on my previous live stream on Friday, that's when I decided to buy in, and because right around that price actually. So we got pretty lucky, maybe around 145. And anyone that did join me and executing on the buy, we are up, about 28% from buying the dip there. So again, we've been talking about buying dip for a while, but the market has been dipping, and it was, we never knew when this dip was going to end. And I'm pretty optimistic. Now, does that mean that the market's going to recover next week? Only God knows. We have no idea what's going to happen. So for right now, though, I think regardless, for Zometica, we're close to a buy zone. It did have a decent recovery, so if it does pull back again, I think you could potentially think about loading up on it. And remember, guys, the end of the month, the True Forma is launching, which is huge news for the company. And I'm hoping we're going to see some, it's going to be just positive catalysts moving forward as they start signing contracts, et cetera, et cetera. The other one I want to talk about before we get Rocky to do some technical analysis is Jaguar Health, JAGX. This stock, I think, got beat up a lot more than I would have ever expected it to. From its all-time high at about $4, we're down 60%. So what am I doing, and what did I do? So I'm trying to dollar cost average down at $1.64. Still, Jaguar Health, guys, very, very undervalued, I think, at $195 million market cap for the total addressable market with their products. I truly see that it has some strong potential moving forward. So for me, personally, I'm looking to continue to load up. And my dollar cost average right now is, I think it's a little over $2. So I think it's time to potentially average down, especially because it didn't really have much of a recovery after the stock beating it that it got down to $1.35. It bounced up, like the other stocks did, but still at 164 right now, I would consider this a buy zone for me. And so, yeah, of course, ultimately it is up to you on what you buy and sell. Again, I just tell you guys about the plays and the things that I'm looking into. So yeah, let's go ahead and take it to Rocky to do some technical analysis for us, and then you guys can make some requests too in the chat, and I'm sure Rocky would be more than happy to answer some of those or respond to some of those chart requests. So let's do some things live.
All right. Thank you, your pop. I really appreciate you allowing me to come on, showing some technical analysis.
For sure.
But furthermore, let's get into Zometica. So if you can see my screen, I'm on the Zometica chart. Can you see
Now,
that?
yes, before we continue, can you guys hear Rocky? Let me know in the chat real quick. If you guys can hear Rocky, just say you can hear him, and then we'll move on. Let's see. Just waiting for their responses. Yes, they can hear you. Okay, perfect.
They can hear. All right, so we're on Zometica early in the morning, guys. Thank you all for coming to the stream once again. Really appreciate you all being here. We got 100 viewers. That's great. So let's get into Zometica. So it's currently 178, and like Ahmed just said, we received a full pullback on the S&P 500, and well, he didn't say that, but there was a lot of pullbacks in a ton of stocks. You've seen the Zometica and Jagex, Neo, and a lot more. Essentially, every stock pulled back. We had a huge correction, and this is why it's also great to do dollar cost average. We couldn't really do anything about it, and yeah, that's the furthermore story. But now let's get into the technical analysis. So you see in this green right here, I highlighted are some support areas to potentially add on. You see that the support area, and for people who are new to technical analysis, support is just where a stock bounces the most times. So in this case, you got 1, 2, and 3 places it bounced, which also represents a buying opportunity. So you got the 138 support right here, and in Ahmed's stream on Friday, he actually showcased the support range right here, which I actually like. But anyways, so we got the top right here at $3. So if Zometica breaks $3, most likely it's going to run again. But as you can see, it's in just consolidation mode, and the range is between 3 and 135. But what I see, like my future projections for the stock, is that it bounces a little bit more. If we can ideally get a break from drawing this resistance line, if we can get a break of $2, that'd be great. And with the momentum of Zomedica's stock, and if you early on look at the 15-minute candles of the stock and like track the stock's movement, what I'm predicting is that we get a pullback to at least, it might not be what people want to hear, but we do originally get a pullback always in the morning, about 3 to 4% in the first 15 minutes, and then the markets continue to rise. That's how really the market is a lot of the times. So then we get this little pullback, and then we go up, and we consolidate, and we can probably break out. This is just, what I'm thinking in case, pre-market goes bad with the futures dropping off the stimulus check news. It could be a whole lot different. But for now, these are my price projections for Zometica. It may not be accurate. It depends on the news we're receiving. But yeah, that's Zometica stock analysis for y'all.
All right, that was very thorough, Rocky. Thank you so much. So as you guys can see, Rocky with his technical analysis, he has a lot more experience. That's why, of course, we love having him on. But yeah, again, the big thing here for Zometica, and I think with the catalysts that are incoming with True Pharma, is that I truly think, and I'm hoping, as long as the momentum shifts in this whole market pullback and market correction territory to more of this bull run that we've seen all through December and January, and even the beginning of February, that's going to help, I think, quite a bit get us past that $3 resistance point, or $2.90, approximately $3, and then I think we could see it run up. But guys, remember what I told you and how to play Zometica. It's that I don't want this to be necessarily a long-term hold for you guys as of right now. For me, I'm ready to set my trailing stop losses when it starts having its run up with all the momentum heading towards the True Pharma launch. A lot of people have been saying, why are you focused on Zometica so much? Why are you hyping the stock? I'm really not. We have a small community here on YouTube, as you guys can see. But regardless, what we need to do is be able to pounce on the fact that people right now are not everyone is looking at Zometica. Wall Street is still sleeping on it. Again, a lot of people are saying it's the product that they have is not necessarily that innovative, which I completely disagree with. I think that their point of care, very quick results, that's something in medicine in general that's being highly sought after. So I think, again, what we'll see with Zometica moving forward until the True Pharma launch is a continued price run up as long as the market decides to stop pulling back. So again, we know what dropped recently. If I just pull up here, stimulus check update, I guess you could call it. But regardless, as you guys saw, and I made a video about it, that the Senate just passed the bill finally they passed, not the bill, excuse me, but they passed the relief bill for the pandemic, right? The pandemic $1.9 trillion relief bill. This was as of pretty much Friday. So regardless, when stimulus checks come out to the people, especially here in America, obviously, it's going to create more potentially of a buying pressure, especially for those who have been able to get back to work and are looking to start investing.
We think we have a deal. Oh. We think there is a deal.
Okay, sorry about that little commercial that popped up. But regardless, everybody, again, I think with the stimulus information, the stimulus package that's just finally going to pass hopefully next week, and the market finally deciding to potentially recover, we're going to see more and more of these catalysts. And we know what's happened in the past when stimulus has passed. When stimulus passes, the market tends to do well, at least for the short term. And that's hopefully what's going to happen for the remainder of March. So let's go ahead. Rocky, if you could look at JAGX, and I really like the fact that you just showed this these trend lines with the bouncing. So as you guys can see there.
Sure thing. Once again, I really appreciate being here. So let's get into JAGX. So right here, what you can see, I pre-made these trend lines and they just stayed intact. Of course, you got the market sell-off. That's going to be mentioned in every stock because that's just how it is. But you see JAGX had a huge run up all the way from $4 from a low of $35 in 2021. But obviously, after a few months, it has seen some decline. And that might be because of lack of interest by many people. It could be other factors like stop losses and stop loss rates by banks. You never know. But we got some trend lines here. I did try to make them really clean. So if you guys could see, there's just some resistance downtrending, right? And every time this resistance has been taken on, it's been failing. You see this breakout right here, but you can't really call it a breakout because it did drop right after below resistance. Once again, the stop loss rates continued on, but now we're looking at a support of 133. So if I do draw some support, it'd probably be right here. So the thing is with JAGX and Zometica is that they actually have the same support, I'd say. Being at 133 and 139, it's just both of them are literally equal. But as you can see right here, resistance is currently at 190. So we do have a long way until we get, pushing towards that $2 mark again. But yeah, again, dollar cost averaging is great if you're down on a position heavily. Always have some cash on hand to average down your positions. I do think that's a really key factor in this market. We're currently having, shifting cash from a lot of funds, from a lot of sections like travel sector, stuff like that. So yeah, really, really key note to dollar cost average.
Absolutely. I 100% agree with that. Dollar cost averaging, I think, is one of the most important things that people have just finally started learning and kind of knowing how to approach. Because again, a lot of us started having this whole fear of missing out, especially when stocks were running up continuously for almost pretty much since the recovery in March. The entire stock market has just been in this upward trend, 1 to 2 red days here and there, but overall it's just been green after green after green. And so people were more than willing to drop all their money into the market all at once. And now there's some repercussions because of that. Because a lot of people, especially on my channel, when I mention a stock, I mention to you guys what I consider a reasonable buy zone, right? So again, I think that's something we all need to start focusing on. And that's why technicals are so important. With technical analysis, something that I did not pay attention to when I first started trading is that it kind of gives you, this historic picture of what's happened to the stock. You could look at these resistance lines, these levels of support, and then you can identify, okay, so it seems like it's really high right now. Like look at JAGX. If you look way back where Rocky has it, beginning of 2021, this run up to $4, look at that. It's just on this massive bull run. And always when you see a stock running up that high, that quick, there's going to be a pullback because that's inevitable. With any stock ever that ran up, it had a pullback, at least at some point, which then, that's when you can start considering when I should potentially buy in. So regardless, that's why I always say, around the support lines, those are potentially good buy zones, especially if it touches that line of support multiple times. That's the biggest indicator of, hey, now it's time for me to buy the stock. So with Jaguar Health, as he's mentioned, maybe not. I think right now, relative to where we were, it's potentially time to consider, starting a position, especially if you're someone who believes in it long term. But in the short term, again, following the technicals, you can kind of identify what are good buy zones and where should I get in on it. So that's kind of my 2 cents there. Let's go to the chat quick and see what everybody is asking. Let's see. We have 148 people. Wow, well, happy Sunday. And thanks for everyone who's liked the stream. The stream is doing really well on a Sunday. which is awesome. I love seeing, a lot of people here with us. And before I continue, I do want to quickly, I'm going to pin Rocky's channel on the top of the chat here so everyone can go. If you aren't subscribed, what are you doing? You need to go subscribe, because this man really knows what he's doing when it comes to technical analysis, and I think he does it in a way that's very simplified and helps people kind of understand what it is, what are good buy zones, etc. So let me post his channel here and then I'll pin it. So if you haven't subscribed to Mr. Rocky Finance, please do so. But let's go ahead and keep going. So what is everyone saying for the, let me pull up the chat here. IDEX chart. I saw that a couple times, IDEX chart. Or CTRM. Let's look at CTRM actually, and then we can look at IDEX too, because I know that's one of the competitors of Zometica. But I'm gonna pull up the basic chart while I give Rocky some time to do his thing. CTRM. Guys, this is a company right now that I'm looking to actually potentially start a position in. And so Rocky can maybe give us good buy zones for it. But as you saw, it ran up, and I told you guys, anything that runs up this quick, look at this. 900% run up and 9x return on your investment if you just in a period of 2 months. That's pretty ridiculous. And it kept holding, right? There was a little bit of pullbacks, but then it was just on this bullish, very bullish graph, obviously, and the chart's just saying so. But again, the overall market pulled back, and it got hit. Pretty much one of the hardest stocks that were hit, down 53% in the last month or so, a little less than a month. So with CTRM again, Castor Maritime, I think it's truly one that has some long-term potential. Again, their fundamentals, things that I've covered on my videos. I can't really recall as of right now, but again, overall, if you're someone that at 173 you were considering it, or at $1 you were considering the stock, maybe it's time to start thinking about what is going to be a good buy zone. And maybe it did find some support. I don't know, kind of consolidated around $1 for a while, but let's go ahead and push it back to Rocky so he can show us what he thinks with CTRM.
All right, thanks for letting me talk about CTRM. Before I get into the CTRM analysis, I'd like to actually talk about some things on CTRM, because I've been watching this stock longer than most people on YouTube. So actually, let's take it back to some history. As you can see, I have done some technical analysis in the past, but let's get into what happened with CTRM. So originally, why CTRM was 17 cents to 12 cents, like a lot of other stocks, is that they had this dilution system going on, whether that be the stock rising like 5 cents and then it diluted a heavy amount. There was always this dilution with shipping companies and Zometica, if you saw. But then again, the price did push once people in early December looked for cheap penny stocks that were trying to go up, and moments later, a few months come, CTRM's up 900%. This is where this 900% comes in, and I think it's really important for you guys to understand because of its past history. CTM was a diluting machine. It dropped many offerings, but now it's back up. I haven't seen much of an offering because I think the PR team is really managing it really well. So yeah, so let's get into the technical analysis. First of all, you see some Fibonacci lines. These are just areas of support and resistance, potentially either way. But let's get into what happened on Friday. So on Friday, a lot of stop losses got hit on CTM. With pre-market, CTM was 60 cents and then it bounced all the way to 80 cents. So you can see a common trend. CTM ended up at 80 cents once again, and you could see it bounced off here. So why did it bounce off here exactly? And you can see my notes are here. CTM had actually had a lot of support here. Considering why CTM fell 15 cents is that it had a huge gap to fill, which you can see in the 80 cent range to 77 cent range. CTM had a support established originally at these 60 cent areas, so that's why it bounced off 65 cents. But now furthermore, in the past, in February, CTM battled in this continuous support zone where it just broke down, but now it's looking like a healthy uptrend. Taking the fact that it is at support and bounced multiple times, I do say so. But for a furthermore analysis, we can see a pattern starting to form with this resistance touching 1, 2, and almost 3 times. We're gonna see if CTM hits $1 mark this week. Obviously, I'm gonna be bullish in these sort of analysis, and I do see a potential adding zone once again in case CTM does not drop all the way to 60 cents. If CTM does dip like 10% or 5% market open, like a lot of penny stocks do, a potential adding zone could be at the 74 cent to 76 cent range. A lot of supports have been indicated to move from here, and you can see it tested once, twice, 3 times, and 4 times. So yeah, a break of 92 cents would send this stock flying to $1. But obviously this market has changed, so we have to see where this goes. But thank you all. It's my analysis on CTRM.
All right, cool. Thanks, Rocky. So again, for CTRM, I think I'll listen to what Rocky had to say with the potential buy zone. So that 75 cents, instead of, just jumping right in when the market opens, because it did pull back to 66, but again, it bounced right off of that. And anything that sharply pulls back, I say often, tends to sharply recover. And hopefully, again, all that matters right now is the stimulus bill passing for the short term to help the markets, or to start creating this new buying pressure for people to start putting some money into the market. Because, with this, people were talking about, we're entering a bear market, which would be scary, because if we pull up the S&P 500, and I always talk about this on my channel because I think it's the best reference, the SPY or S&P 500, because again, this is a conglomeration of the top 500 companies in the United States, and you kind of look at their overall performance, and how they do typically is how the exact direction the market overall heads towards. So regardless, if you look here, we know back in 2000 when the dot-com bubble bursted, right, and then we entered into truly a bear market, down 40%. It took how long to recover? About 6 years before the market decided to wake back up. So, and that's what happens with the risk of the market. And I know people are looking at this right now and saying, hey, it seems like right now it's had that kind of run up where maybe we're going to see another pullback like we saw in 2000. But of course, economics goes way beyond that. The stock market does as well. And over time, companies and just everything, people are more and more people are coming into the investing scene. Back in the early 2000s, it was mainly, people who had the retirement accounts, IRAs, individual retirement accounts, and Wall Street investors. We didn't have the people like you and I, 20-year-olds, even older teens, early 30-year-olds who just for fun or as a side hustle, that kind of thing, investing into the market. So that's why, we saw this unprecedented run-up that people really couldn't have guessed after the housing market crash and the recession that we were in 2008 when Obama took office. After that, we saw, look at this, up 364%. The fastest, this past decade was the fastest, obviously, and most exponential run-up we've seen in the market. So again, with that being said, I think there's nothing that seems like it's going to slow us down. I don't foresee that happening in the short term or even long term future, because again, more and more people are coming into the investing scene, and the more coming into the market, the more money coming into the market, the more individuals investing, the higher we're going to continue to see the markets go, as long as nothing crazy happens, right? We know what happens when wars break out. We know what happens when just anything of that nature kind of happens. And again, 2001, you could see after the 9/11 attacks here in the United States, we saw what happened with the market. We saw a continued pullback, even though we broke out of that bubble phase. But regardless, unless something like that happens, insane news that comes out that scares people away from putting money into companies because they're like, oh, the world is going to end, that's really the only thing that I could foresee. So that's why I always focus on the S&P 500, guys. But I know we mentioned IDEX, so let's go ahead and pull that up. IDEX stock. So IDEX, Ideonomics, again, it's pulled back heavily. Let's see. If we look at the 1 month, maybe we could have, Rocky could probably do his thing with the technicals, but wow. February 8th, it looks like maybe, around the 8th of February, yes. So if we do the 1 month chart, you could see it's pulled back 47% from its high. So with Ideonomics, again, it's a technology company that was founded in 2004. Fundamentally speaking, I think it has potential because it kind of it's in a lot of different little sectors. But regardless, it's not a company that I've invested in because I didn't really do my due diligence or research on it quite yet, although it was pretty hyped up, especially end of the year last year. I heard about it at $1, and that's when I was potentially considering it. And you guys could see it had a 364% run up before it significantly pulled down. So right now, if you're someone who wanted to get some skin in the game for IDEX, of course we'll have Rocky chart and tell us what potential good buy zones are. But just logically speaking, if something drops this heavily, and it's a company overall that has, a lot of people on board and people who are interested in their fundamentals and ideologies, then at $1 billion market cap, depending on their addressable market, I think we might have some continued run up. So this is a company I've been thinking about looking into, but I truly have not, because I've been so focused on, the 6 or 7 stocks that I've been heavily covering on my channel: Predictive Oncology, Zometica, of course, Jaguar Health. So those are the kind of companies that I'm super interested in, because as a pharmacist, I love pharma stocks. So love looking at big pharma, love looking at data that comes out about certain drugs and research, and that's kind of why I focus on those things. But let's go ahead and let's see what Rocky has to say about Ideonomics.
All right, thank you, Pop, once again. I'm going to be covering IDEX, but I do want to make some quick notes on the S&P 500 because I do have some technical analysis on it. So before we get into IDEX, let's talk about the S&P 500. So as you can see, there's a lot of buying the rumor, selling the news happening on the S&P, with tech stocks being down such as 5 to 10% in the overall week. This was a great correction for many stocks for people to pick up. But I do want to discuss some important levels. So you can see that I drew some levels. The S&P's topped at 392. But furthermore, on Friday, there's just a lot of patterns to see. You see this little wedge right here. You see this break of a wedge, a bear flag happening, and just a little W forming. You get this double bottom that was created right here. So when a double bottom happens, it usually makes a W shape and then breaks out of that. You can see that pattern. But most importantly, the news about the 1.9 relief plan. So with people passing it on, there's a lot of controversy whether it be up or down. Biden has not been in the stock market. I don't think he's been tweeting anything about it. So there's a lot of speculation whether Biden cares about the market. But overall, you see a lot of stocks benefiting over the Biden administration, such as NEO, might not necessarily be in America, but a lot of electric and solar companies. But we do have this pullback. So what I want to say quickly is that there is a key level in the S&P 500 where it could go, right? When futures open at 3 p.m., you could either see buying or selling because of this news. The sell the news type of thing could happen. So what I want to say is that this 369 area on SPY is really important to look at. And it's important because there could be a potential bounce here and there's huge gaps to fill downwards. So yeah, that's my quick notes on SPY. Let's get into IDEX. So IDEX, I do have some history on where the stock was. And a long time ago, there's this rumor that IDEX took care of the EV charging. So if I go to the 1 hour chart, it'd be easier to explain. But this whole run up from IDEX was a huge controversy back in June because of the fact that there were short companies on this company. Yeah, they targeted this company, essentially Heidenberg Research, if you've heard of them. They targeted IDEX for them not having a factory in China. They've been showing multiple sources and photos, which, Heidenberg has been on a tear shorting stocks. And the CEO responded quite vaguely. He didn't describe much of what he's been been up to, but then the stock pulled back all the way to 70 cents where it did consolidate. And then you see this little support happening, which it did break, right? The support was tested 5 times and the overall high was 548, and then received this 50% pullback. So suddenly, if you're one trying to establish a position, take into fact that the stock dropped 50%. So there you go. That's one factor. And 2, it looks like, from my previous charts, it's still bouncing off of support. There's this relative support at 232 that did bounce out of. Keep in mind, this was from a month ago. So there is stuff to note. And even though it did support, it looks like it's retesting the support, which is now resistance. So it's looking good for IDEX. I'm bullish overall. If the S&P 500 can keep going, our side is looking great as well.
All right. Thanks, Rocky. So as you guys can see, he kind of mentioned some of the places where we could start paying attention to IDEX and, potentially good buy zones and where to maybe consider getting in on the play if you're someone who's interested in it. And of course, you could do your own research to identify whether or not you think that IDEX has long-term potential, etc. But of course, it seems like fundamental, there might be some issues with the company. So Darius, thank you so much for the comment. If you're watching live, smash that like button. Yes, that does help out with the algorithm and it gets the video out there to more and more people, which of course helps out the channel, which I appreciate. So thanks everyone for tuning in.
Hit that like button, guys.
Hit that like button. Rocky says it. Hit the like button. Hit the like button for Rocky joining us and actually having a functional stream for once. All right. You have not covered SRNE. I did actually cover Sorrento Therapeutics, and I'm very long on the company. So because of that, let's go ahead and talk about Sorrento, ticker symbol SRNE. Let me pull it up on my Chrome here. So Sorrento Therapeutics, SRNE. It's a company that I'm pretty excited about, another pharmaceutical company. Again, they're looking at men's health, and there's a lot of different products on their pipeline, but it did have a pretty crazy run up, and I know it was potentially targeted by the Wall Street bets community, which caused it to kind of have this squeeze type, even though it wasn't a short squeeze, just a lot of people buying in, causing it to go up to $16.51, and since then it's came tumbling down. Now, what I talked about when I covered the stock on my channel was tip ranks and the price targets that they had for Sorrento Therapeutics over the next 12 months. So SRNE, let's just pull up what they have here. I use tip ranks just because it's, again, just very user-friendly and simple to use. But as you can see, kind of unanimously across their the different Wall Street analysts that they have, Rom, he's the one who talks about, who set a price target of $14 to BNGO, which it actually was hit. And historically speaking, anytime you look at an analyst, these guys are nothing but people who have been in the game a lot longer than you and I have, more likely than not, because they've been doing this for, decades and decades, and this is what they do for a living, full time. They are Wall Street analysts that go in and they work for certain hedge funds, companies. So H.C. Wainwright, very reputable, B. Riley Financial. So these guys are saying $26 to about $35 range. One is saying a $21. Again, when it comes to a 0-star analyst, I don't really think much of them. But the 5-star, nearly 5-star analysts, that's a pretty good indicator that they are very optimistic for the short and long-term future of the stock. So if you look here, it has a 215% upside potential. But all that means is they have to hit the milestones that they have set forth. So I know I've already covered Sorrento Therapeutics. But regardless, let's just, again, go on their website here quick and pull up their pipeline. So as you guys can see, again, the reason that they have a 12-month forecast is a lot of their products are currently in preclinical, phase 1 and phase 2. Now, the two things that are potentially causing the stock to have such an unprecedented run-up is the COVID trace and the COVID sticks. So the antigen test and a diagnostic test. So again, they're looking for FDA emergency use authorization application expected, and then they've already submitted the antigen test. So a lot of the times with the pandemic, people have been focused so much on vaccines, the vaccine rollout, vaccine this, vaccine that. But what you guys don't understand is, especially for me at my pharmacy, we're actually a testing site. We're a verified testing site, so we actually have been doing so for the community for a while now, especially here where I live. But regardless, with diagnostics and antigen, so antigen testing, just so you guys are aware about the difference, antibody testing, that's where you do a blood test, so things like PCR, etc. That'd be the antibody to see, have you ever had the disease, the C word, if you will. I don't want to say it. But regardless, if you've had it, it's going to show you an antibody in your blood, which means basically in the last 90 days you've been exposed to it. Now, for antigen tests, those are the nasopharyngeal or the nasal swabs that you've probably seen all over social media, or if you've been tested because you had recent exposure or symptoms, you've probably done an antigen test. Now, testing kits, there is, regardless of what people have said, there's definitely room for more. So the fact that they're trying to get into this game really impressed me with Sorrento Therapeutics. And otherwise, they also have, if you look down, they have some great things for pain, immunotherapy. And again, their big focus right now is any pharmaceutical company that's getting into the C19 game is going to probably do well in the short and long term. So I'm very, very bullish on Sorrento for the short and long term, holding strong and looking to potentially buy more with this dip. So it's not one that I've really been looking at too much lately. But, with this big downfall that it had over the last month approximately, maybe it's time to think about getting it on Sorrento Therapeutics, because you're looking back at where it kind of was consolidating. Because again, I think we talked about this one early January, so we're still up on our initial investment, I believe. I'm not 100% certain. But regardless, as you guys can see, it's still down significantly, even though it came down from this run-up. So let's have Rocky maybe do a quick chart on Sorrento Therapeutics, because he could tell us potential buy zones, the levels of support, etc. So Rocky, how about, before we do that though, I do want to give a quick shout out to Big Apple. Big Apple supports, almost every stream. So thank you so much for the super chat. I do appreciate it. All super chats will be going to Rocky and I because again, he's helping out so much. So I appreciate you guys. And let's go ahead and look at Sorrento Therapeutics. Rocky, have at it.
All right, so we're going to be talking about ticker symbol SRNE. Thank you, Ahmed, for bringing up news about SRNE. So let's get into the technical analysis right now. There is, 200% upside from these analysts on tip ranks. But furthermore, we can study these patterns to see where SRNE may be headed next. I did draw a few notes and, a bit of a question mark to show what my analysis is. So let's get into it. So first of all, there was this huge market pullback. SRNE is down 50% from its highs. And the current resistances for SRNE is this, $16 to $19 huge block area. The current supports for SRNE is, as indicated, are these trend lines right here. You can see it bounced off 1, 2, and 3 times. And the general support is at a range of $6 to $7 for long term. So we're on the 1 hour chart too. And let's get into this. So there's a ton of patterns with SRNE. As you can come into a conclusion with me drawing these circles, I'd like to indicate you see that SRNE is topping just like the initial run. And once this initial run started, there was 3 main phases. First of all, the opportunity it had, the run up. So let's get into that. So I just want to get into the run up. So you see right here, indicated in this ellipse right here, that there's this period of phase where people were accumulated before the breakout did happen. And when this did happen, right, it ran up all the way like from $7 to $18, representing 200% upside. What I see right here is pretty much identical to what is happening, right? You get this initial run up, and you see this initial run up right here. It goes popping, and then it pulls back. You see like 50 to 60%. And what do you know? We're in this pullback session, right? You see this little pullback happening, these identical pullbacks from previous charts. And what can we see? Well, we can potentially see the same thing happening, right? You also have this little wedge supporting SRNE, and this could potentially break out this wedge to a likely high side of $10. So with all of this technical analysis from previous time points, right, this data was covered over like 8 months, and you could see it probably happening again. So my analysis on SRNE is that it would probably go to $10 in a couple of months, could be this month. So that's my analysis on SRNE.
Sorrento Therapeutics, you guys heard it from Rocky. So potentially looking to break out again. So again, if you're someone that's looking to potentially start a position because you believe in the fundamentals, not because you watched it on a video or you just read quickly about it, go on their website, look at their pipeline, look at their management, like I always do on my videos, just to make sure you guys are all aware of what potential you're getting into. Because again, anyone that's putting money into a company or investing in a business, the fact that they're doing diagnostic and antigen testing, again, with anything, with all these programs, for C programs specifically, understand it's potentially short term. What we want to look at is immunotherapy, pain, lymphatic delivery, all the other things on their pipeline, and why they have some strong long-term potential. But for right now, again, the big focus is C19, but cancer treatment, full pain control, that's pretty significant too. So I talked about it in my previous video, the epidural route for some of their products that they have, RTX and lymphatic delivery of these anti-TNF agents, PD-1. So a lot of the things that we are looking, there's still a gap in the therapeutics. So again, meaning there's not a lot of medications readily available for these certain diseases. So again, pretty significant if you ask me. Sorrento Therapeutics, you guys, if you're interested, again, do your deep dive, do your due diligence before investing into it, of course. All right, what else do we got? Let's see what everyone else wants to talk about, because guys, you guys are our focus for the day. So M-Money, you saw we did say we covered it. Let's see. Sorrento. Zometica. Let's do Neo. We talked about Zometica first thing in the stream, but we'll come back to Zometica every little bit because I know that's what everyone is here for. So we'll kind of cover some of those things, and hopefully Rocky can leave his chart up just to give you guys a quick review of what's going on. So Neo. I think Neo is one that I am definitely watching. So my cost basis, unfortunately, is so low. I don't want to say unfortunately, because I am truly fortunate because of that. But regardless, it makes it hard for me to average up until I see, a significant pullback. So I got in early September around $17 a share. And, NEO, like other EV companies, had a great 2020, right? If you look back at the 1 year, NEO was a penny stock, folks. A lot of people forget that NEO was literally a penny stock. Anything under $5 is considered a penny stock, especially depending on market cap. But regardless, it was under $5. It ran up to about $60, $63, $64 approximately. So look at that. It had a crazy year. For anyone that got in early, congratulations, you're up a lot. Even now after the pullback, still up 11x on your initial investment. But again, with NEO, fundamentally speaking, I know this big scare came out for EV companies saying, hey, the big thing with these EVs is that, semiconductor shortages are what people are afraid of. But guess what? Think about it. Whenever there's a shortage of a certain component for cars, for airplanes, for anything, whatever it might be, whenever there's a shortage, manufacturers of those products will ramp up their manufacturing. They're going to ramp up the quantities that they're pushing out. So for, again, like THBR was this recent one that I've been looking into. It's a SPAC, THBR, and they're a semiconductor SPAC. So again, also time for us to maybe think about diversifying our portfolios and adding SPACs or stocks that are in the semiconductor space, ones who manufacture semiconductors. So THBR, if you don't know, look into it, because they are merging with a company that is looking to, or that does make semiconductors, which again, we know there's a shortage of. So I think that's going to increase the demand for their products, which in turn is going to increase, hopefully, their revenues and of course their market value moving forward, or their market cap. So for NEO right now with this pullback, I never thought we'd ever see it again hit under $40, but guess what? We did. It hit under $40. I know they didn't beat expectations. They actually were below expectations for Q4 earnings, but that doesn't worry me, because for EVs, anyone that's investing now, we are looking at investing in the long-term future. We're looking at 2030, 2040. What do you think NEO is going to be worth? At 59 billion, I think that's just the start. And right now, potentially, if you're looking at buying in, it's down 40% from its high. That's a great buy zone, fantastic buy zone, in my opinion. So I'm looking at potentially buying more NEO, increasing my average cost, because again, I still think this is a discount relative to where it could be. Obviously, we saw it hit $62, and I think we're going to hopefully see it recover and beat that and expand, go up from there significantly. So that's my take on NEO. We'll have Rocky do the chart on NEO. But before I do that, I do want to give a quick shout out to Smokey. We'll cover NSPR next. Thank you for the super chat, my friend. And he says NSPR. So let's keep that aside while Rocky does his charting.
Hello, can you hear me, Will?
Yes, clear.
Okay, so we're going to get into NEO. Can you see my trading view?
Yep.
Okay, so we're going on NEO. As you can see, there's just one simple pattern on NEO. It doesn't have to be stressed a lot. There's just one simple pattern. So after its run up from its lows, as it was a penny stock, it hit highs of 67. And, as a result, it's down 50% from its highs. So, which is already a great adding zone. It doesn't have to be stressed that much, especially with the long-term future with NEO, especially since China is the largest EV market possible to have. NEO has a lot of expanding opportunity. But looking at the technical analysis, we could see a little bit of a triangle pattern forming, right? You see this whole triangle. It tried to break out of its triangle and then failed, which resulted in a break of this triangle. And then NEO started to sell off as the market did sell off. Keep in mind, it's similar to Tesla's chart, right? Tesla is pretty much its partner, and whatever move Tesla had, NEO kind of mocks it. So as you can see right here, there was this range between 44 and 51 that ultimately broke. And this was due to the market sell-off. And then there's some notes. But generally, there was support at $40, which is broken, which represents a general buying opportunity, right? These 32s can't be stressed enough. You didn't get these buying opportunities since 5 or 3 months ago, which is really huge, especially for the company. And yeah, the earnings didn't. We actually covered what NEO would do if the earnings didn't do well. You can check the last live stream we did last Friday. I stressed that if NEO didn't do good on earnings, we could see a potential $30 range, which it actually hit. And I said this original run at 50, which you can see it perfectly hit. And yeah, with technical analysis, we can see what potential adding zones are. And potential adding zones right here are now $32. It has, went down a bit, but then there's this other adding zone, which you could see at $36. And, generally under 40, this is a great long-term investment anyway. So that's my analysis on NEO. Let's get back to your pod.
All right, thank you, Rocky. So NEO, guys, as he said, $32 would be potentially a great buy zone. But right now, again, if you're someone that's looking to potentially dollar average cost down, or if your cost basis is high, if you got in nearly here at $59 to $62, maybe say, because you really believed in the company, averaging down is never a bad thing. Start doing so, So again, right now at $38, potentially time to get some skin in the game if you haven't already. But if you have and you want to average down, maybe the right time to do so. For me, it's potentially, maybe I'll wait for that $32 before I decide to average back up if it continues to pull down. But again, it all determines on how futures look for tomorrow and what we see with the market moving forward after this, correction territory that we were in for a little while. So that is NEO. Now, Mr. Smokey2797, he says NSPR. And again, thank you so much, my friend, for the super chat. It does help out the channel. And it's just, again, showing your support. Always appreciated. But let's see. So InspireMD, it's an Israel-based company. I don't know much about. We'll have Rocky chart, but let's go ahead and NSPR. I think was it NSPR. I want to pull up their website. InspireMD Incorporate. Never heard of this company before, so it's a new one for me. But again, I'm always open to covering new stocks, new companies, if they truly have some potential. If I see that they have great fundamentals. So the C-Guard EPS, sustained care for your carotid stenosis patients. So let's see here, embolic protection. So they have an EPS system, novel mesh carotid stent designed to improve patient safety through sustained embolic protection. So quickly before I dive into it, just so you guys are aware, a lot of people who have, so we have our carotid arteries in our necks. So oftentimes when people have a disease, or if you know someone who has something called atrial fibrillation, it's when the heart can potentially create a clot. And when that clot forms, unfortunately, it goes up through our carotid arteries in our necks, and then in turn goes to the brain, creating a stroke. So one of the biggest fears in people who have atrial fibrillation, arrhythms, you can get them if you go to the chiropractor. I don't want to scare anyone off, right? This is not medical advice, but I'm just telling you guys a little bit of a background about embolisms and clots in general. But oftentimes when we see patients, I had a rotation as a student when I was in the stroke unit. I was there for about 6 weeks, and I saw different patients presenting with different embolisms. We saw things like pulmonary embolisms that usually originate they're from DVTs or deep vein thrombosis. I don't want to go off on a tangent, but just to show you guys again, this is something that is, and then we know there's stents that they put in. But the big thing that the C-Guard has here is this mesh-based system, as you guys can see. So that's pretty interesting to me, but I already know there are a lot of products out there that have these mesh systems. So let's see if they have things on their pipeline. So this is potentially a company that I will look into to see what they have and what different, so carotid stenosis treated with C-Guard. So they're looking to, stenosis is when your stents start closing up. So you can get stenosis from a lot of different diseases. People who have, a lot of plaque buildup in their different carotids or carotid areas of the body. Guys, sorry, I'm kind of blanking out a little. But regardless, when you have plaque buildup from eating too much cholesterol in our foods, they do something called stenting, where they go in and they pretty much clean up these different carotid arteries, different arteries of the body, basically. But again, regardless, this is kind of what this company is trying to go with their C-Guard. So I'll have to definitely do my own research to see what I think of the company. Overall, again, their website seems a little outdated, which is, it's okay. They're focused on their product, not so much their marketing maybe at this time, which is very common for some of these pharmaceutical type companies. So again, they don't necessarily have a drug in place, but they have some things. So their board here doesn't look like, they do have, so they have a medical director who's an MD PhD, very impressive. In 2014, he was considered Inspire. So I always like looking at the management, like you guys know I do. And then I'll look at their technology and how it differs or it's superior to what we currently have. So let's just do a quick glance here. I don't want to focus too much on the company, but looks like, yeah, mesh-based system. How come I can't hear anything? Oh well. So let's look at it for a second. So here's this mesh that they created. I just want to see it inserted into an artery. Oh, that would have been cooler if they did that. I guess they're just talking about the product itself. I can't hear any audio, but regardless, one I'll definitely look into. Smokey, thank you for actually bringing it up because I really haven't had any exposure to it before. So PET is a biostable synthetic fiber widely used in a variety of industries, attached and secured to the proximally and distal crowns of the stent. So again, it's an attachment to stents that we currently already have in place in the market. Does not alter the procedure as it expands with the stent. Pore size is typically between 150 and 180 microns. So, okay. One that I'll look into. We can definitely just look at the chart quick. I'll look at their case studies, and if I'm interested, we'll look at their investor presentation. So always these companies have their investor presentations where they quickly kind of cover their financials, their total addressable market, some of the different things that they have. 614,000 procedures in 2018. So when is this presentation from? January 2021. Okay. But yeah, this is one that I'm pretty interested in. So you can see ischemic heart disease and stroke, as I mentioned earlier. They have a lot of, so the total addressable market obviously is huge, but let's see what they have. I'll look into this one. And if I like it, I'll definitely make a due diligence video on it to get people exposed to such a product. So, okay, I'm going to go off on a tangent because I'm a nerd and I love this stuff. But yeah, let's have Rocky look at the chart real quick, everybody. So again, NSPR.
All right. Mm-hmm. So one of the highlights actually from the investor relations before I go on is that there's a multi-billion-dollar opportunity for micronet products for multiple vascular markets worldwide. So I like to point that out. But taking a look at the technical analysis, there is just, quickly, let's go over it. It did break its trend line from about 3 months. It's just short term, but it did break its trend line from 70 cents, from 40 cents, but it looks like it's going to retest this, so it looks good for the company. Obviously, if you did buy in high, look to dollar cost average at these levels, 60% down from highs. Current support was at 60 cents, but it's looking great for the company. It's looking like it's breaking resistance at 72 cents. So if we see that gap up to 75 cents, what I'm looking for a healthy pullback back to 60 cents, then we get this little double bottom forming, and then we could continue to newer highs up in the 80-cent area. So yeah, a lot of opportunity for the stock. Not much the PR team, but they are working on their product like Ahmed said, and the current resistance is at 90. It's a pretty simple chart. I'm just liking the chart a bit. Look for a pullback, but yeah, great overall to average down.
All right, that's NSPR. If anyone's wondering who just joined the stream, we just talked about NSPR, InspireMD. I'll definitely do my due diligence to make sure I get it out there to you guys, because I've been looking for new companies to start investing in with this pullback. And right now, looking at, just even the 1 month, as Rocky did, it's down significantly, 43% from its high of 131-ish. Again, down significantly. So looks like it's consolidating for a while. Yeah, so one I'll look into. Thank you so much, Smokey, for bringing it up, and thank you for the super chat, my friend. We do truly appreciate it. So let's go ahead and go back to Zometica for a second, because I know a lot of people have joined the stream that weren't here since the beginning, and that's the title of the stream. Zometica, right, and other stocks we're watching. But regardless, as I mentioned earlier, unfortunately, the market correction decided to happen at the worst possible time for our favorite stock, Zometica. But guys, again, with that being said, it's pulled back to about $1.43, came back up 30% from Friday's low. Again, this is just all in one day. And that shows you there's some buying pressure. There's people who are interested in getting in on the play. They probably had, and there's different ways that these kind of things occur. But oftentimes when we reach a bottom, people might have limit buy orders in place set for Zometica because they're waiting for it to pull back to a certain value before they were willing before they were willing to start a position in it. But regardless, Trueforma is hopefully going to be launching. I talk about it so much that maybe it's getting old for some, but for me, I just get so excited about the company. But Trueforma is launching end of March 2021, and we're in March now, so 3 weeks. Up until then, I'm going to continue to cover it because I truly think that it has some short-term, very strong short-term potential and long-term as well. But for anyone that's looking to play this one as a get in and get out type play, right? It's when you get in, buy in at a low, sell when it skyrockets up, and as soon as the news drops, when TruePharma launches, I will expect and anticipate a sell-off to occur. So that's truly what I think is going to happen with the stock. And then after the sell-off occurs, in April, that's when I'm willing to even buy more shares and hold those very, very long term. And I'm talking 5-10 years down the line. Because again, with Zometica, people have been worried about the fact that their products are not patented. So potentially, you have some argument there, but regardless, with that being said, there's potential for bigger companies to buy them out. Same thing with Sensionics, right? They actually own and patent their own products. So we'll actually talk about Sensionics next, because that's one that has been people have been very interested in on the channel, and we've talked about it on the Discord quite a bit. But regardless, Zometica, guys, I think that we're going to see a continued run up. I'm hoping we break the strong resistance that we have at 270. Rocky did chart it out for us earlier, so maybe we can go back to him to quickly remind us what the technicals are for Zometica, the buy zones, and again, for anybody leading up to TruePharma launch, I am looking, just so you guys, full transparency, and I talked about it on my previous videos. Before the launch happens, I'm going to be setting my trailing stop loss, maybe a week and a half before, as long as the market decides to recover. This coming week and the next few weeks, moving forward, setting my trailing stop loss to about 5 or 10%, depending on your risk tolerance, and then hopefully buying back in when it dips back down after the sell-off. Rocky, let's have at it.
All right, so we're looking at the ZOM chart right here. We did cover it once again in the beginning, but quickly we're going to go over it. So resistance currently peaking at $3. Also resistance in this current trend line, looking to break near that mid-March run-up. As well as right here, this is current support from a range from 140 to the 139. Great support. It's been tested 3 times accurately on Friday too. You can see this general market sell-off bouncing off the support. So if this does come to this 144, I'm probably going to load up. It's a great buying opportunity for Zometica. But obviously, this is quite a tricky one. But you can see that there is some resistance peaking right here. What I'm expecting on this market tomorrow is that either way, we might get a 10% or a little bit of a 3% pullback towards 169, and then it could break out all the way to 185. Another pullback, creating a double bottom, and then a breakout for the mid-March run-up. That's basically it for Zometica. And yeah, that's the quick analysis.
Awesome. Thank you, Rocky. And thank you for everyone who's joined us on the stream. We're at 180 people, 200 people. Wow, let's go. And for anyone that's just joining us, please give the stream a like. It does get it out to more people. And it does help with the YouTube algorithm that nobody really understands or knows for sure. So let's talk about Sensionics, SENS stock. Sensionics, one I cannot stop talking about because, again, I really love their CGM device, their glucose, the continuous glucose monitoring device. So again, they've developed a 90-day CGM device. For anyone that doesn't know, the current competitors are Dexcom. So if we go to Dexcom here, and let's do stock. And if you watch the Super Bowl, you saw Nick Jonas. He's their one of their new spokesmen because he is a type 1 diabetic. So he was diagnosed, he had adolescent diabetes. And for that being said, for children, it's very, very, very difficult for them to prick their fingers and check their blood sugars at the very beginning. Most diabetics do get, become something more normalized, and it's something that they get used to over time. But regardless, it is something that does affect their quality of life quite a bit. So CGM devices that have come to the market have truly changed the game for those individuals. Look at Dexcom's 5-year. Let's look at its max graph, right? So again, they first came out about publicly in 2005 at about $10 a share. So again, compared to Sensionics currently, if we look at their max chart here, they IPO'd in 2016. But again, versus Dexcom, look at it. Dexcom, mind you, they have 1 week. So they have a 2-week sensor. It's a product that I dispense in my pharmacy. And oftentimes you have to change the sensor out every 2 weeks. Every 2 weeks, you got to put a new sensor on your arm. It's one that goes subcutaneously. So again, under the skin of the arm, or you could put it anywhere where there's fatty tissue, basically. So most people like to do it behind their arm. But regardless, you change these out every 2 weeks, and their product is solid because, again, instead of pricking your finger to check your blood sugars, you just take a reader, you swipe it over, and it gives you this continuous glucose monitoring. It gives you a 24-hour chart as long as you check your sugars every so often throughout the day. Again, with hovering a reader instead of pricking the finger and checking it 4, 5, 6 times a day, depending on your condition. Some people do only check once a day, but regardless, just know their market cap is $35 billion. And let's see, in the 5-day, it got up to about 400, pulled back about 12%. So down 9%. So if you're someone that thinks Dexcom is a good stock, it's down about 13% from its high. So maybe consider that one. But regardless, I think Sensionics has something even better than Dexcom. So right now, sitting at less than $1 billion, I truly think that Sensionics, as long as they get, and they're currently looking for approval for their 180-day and 360-day CGM device. Imagine if you know any diabetics out there, specifically type 1s, but type 2s as well, that have to check their sugars more often than just once or twice a day. Imagine if they had a device in their arm that nobody could really see. Again, it's something that is administered and given in a outpatient setting in a hospital. The doctor just places it via incision, and then for a whole year, all you have to do is have this reader with you, and that's it. No more pricking your finger, no more checking your blood sugars time and time again. And that's the thing that slows down a lot of people, diabetics, and getting them under control, keeping their sugars where they should be. It's because the nuisance of checking, and again, it's just very debilitating having to prick your finger and then get some blood out. Instead, now we have the CGM device. Sensionics truly has a product that I believe in. It already has FDA clearance for their 90-day. In Europe, it's currently being used. The pandemic did affect the stock negatively. So ever since 2020 happened, right, it had its run up to $1.40, say, and as soon as everything started closing down, it got hit hard, down 75%. Why, you might ask? Because pretty much immediately after they got the FDA clearance to start giving it in the United States, guess what? All doctors' offices closed down elective procedures. This is considered an elective procedure because it's not really a medical necessity. People can continue to prick their fingers and be just fine. But unfortunately, for a stock like this one, it was hit hard. And then I know it was targeted. We've had a lot of people start covering it on the YouTube space. A lot of Wall Street analysts started talking about Sensionics. So that caused its huge run up, over 1,000%. And then now it's corrected back down with the entire market correction from 527 down 52%. So guys, we bought in, early on at $1.50, say, and then we bought more around $2. The past, I think it was when it pulled back to around 340, we even bought some more. But then it continued to pull back. We didn't anticipate that. So Sensionics, we'll have Rocky look at the technicals and let us know what are potential good buy zones for Sens. I am someone who's very, very bullish on this one over the next year, 5 years, and even moving forward from there.
All right, let's get into it. So as you pulled up on the chart right here is Sens. Great support levels, accumulating support at this little $2 range. But I do see this as a short, term support only. So you gotta get into the real time. So really truly support is at this little 236 range. And obviously you see this resistance being formed after being down and beaten up by the market. Also, their earnings might have impacted something, but they're mostly looking to improve their product. So any money that goes into this company goes in directly into what they're making. As you can see right here, there's this triangle formation that did break down, obviously due to the market once again. Short-term price targets for the stock, what we can see. Well, I'm expecting a tracement to 260, so 7% upside for now. But long-term, as Europop says, I do agree with everything he said. I'm liking what especially pricking the fingers. That must be annoying to do every day. You see some blood, and especially great to save some time. And yeah, so resistance is at currently 288. So once we get this trending back to 3, we'll see some upside. But for now, might consolidate. Who knows? So once again, 15-minute market sell-off might happen. But if you catch these levels, might be good to add up, start a long-term position. But yeah, that's quick analysis on Sens.
There you go. You guys heard it from Rocky as well. So Sensionics, ticker symbol SENS, one that I'm very long on. Of course, do your research on it because it's a company that I truly think is going to do well in the long term. And I know people have been talking about smaller penny stocks or small cap companies that have great patented products could be bought up. Could I see Dexcom, a behemoth, a $35 billion market cap company, buy out Sensionics? Absolutely. But we as people who held on and bought into Sensionics when it was a baby company before it gets bought out, we benefit massively from this. I don't know the exact ratios, but then we become owners of Dexcom as well thereafter, after the acquisition occurs. So know that the rewards are massive for people who buy into companies before they get acquired. It's not like you just lose your shares. That's not how that works. So just be aware. I know people have talked about it, and that's kind of my 2 cents there. All right, let's go back to the chat and see what everyone has to say. All right. John, thank you so much for the super chat, my friend. Really appreciate you. John is someone who's super active on the Discord. So, my man, I appreciate all your support, supporting on the Discord, supporting on the channel, always commenting on the videos. You are a rock star, man. John with another super chat. Good morning to you, my friend. Good morning, good sir. All right, what else do you guys have? Any stocks you want to cover, Rocky, that you have interested in? People are saying BNGO is going to be lit. Who is that? Brandon. Brandon says BNGO is going to be lit. Let's look at BNGO quick. I'll have Rocky maybe pull up the chart himself.
Yeah.
As you guys know, I don't have to talk too much about it. BNGO, the Sapphire, this is a product that really, really took off here in 2021. If we look at the 6 month, just right before Christmas, 78 cents a share, guys. 56 cents earlier that December. So since then, you've made a 30x return on your investment if you're someone who bought in before the hype. Now, with anything that runs up massively, we do see a correction, with market pullbacks, which makes total sense. People took their profits off the table. But again, for me, I got into BNGO at about $2 a share, end of December after the initial run up, and people were like, what are you doing? What are you doing? And I did my due diligence. I did my research, and I was like, guys, this is a company that has some potential. So since then, it's run up about 600%, and I can't be upset about that kind of return. But now with this pullback, I truly think with the products that they have, this one is going to at least double again in the short term. So for me, it's something that I'm potentially going to buy more of, hopefully next week. I've been waiting for buying power, and finally I have some available. So I'm looking to buy BNGO, Sensionics, and of course our baby Zometica, if I can get them all at good prices, depending on what happens next week. So Rocky, let's have you talk about BNGO.
Perfect. All right, let's talk about BNGO. And for those who are new, we did cover BNGO on my channel actually at 80 cents. This was a long time ago, but theory is still valid. So let's get into the chart. What we see right here, obviously market pullback once again. It is inevitable at $5. Great, share price to pick up after that $35 or 35% fall. Actually, it's also a 40% fall, which is quite significant. So those who are trying to establish a long-term position, go ahead. And obviously, you see this little triangle formation, breakdown happened with everything else. Had some previous notes on where, this was headed to. Actually headed to $16 and then pulled back. So right now, the short-term price targets are looking for $8 essentially. And, that's really it. We could expect a sell-off Monday and then go back to newer highs. It just depends on the stimulus news. That's my quick update on BNGO.
All right. That's Rocky's update, guys. So BNGO, I'm loving it. One of my favorite healthcare related stocks. I think it has some very, very strong short-term and long-term potential, especially after this pullback. It makes me a lot more comfortable to talk about it because, again, after its run-up, I was kind of, a little worried, just saying, maybe it's a little overpriced for the short term, but now for sure, I think it's at a great buy zone. And again, once it hit Wall Street and people started looking at it, look what they're saying, for the next 12 months. Jason McCarthy, 5-star analyst, Kevin DeGeeter, also another 5-star analyst, $14 to $15 price targets, which we already beat. Yes, this past month. So since they mentioned them, we beat those. But regardless, I think after this correction, it's going to bounce right back up towards that. So if you're someone that's looking to get in on BNGO, beautiful prices to potentially look into doing that for the short and long term. All right, let's see what the chat has to say. BNGO. Let's scroll down and see. Oh, am I lagging? Uh-oh. No, I'm not. Here we go. Can you touch on John with another super chat? John, I don't even know what to say, man. Thank you so much. We really do appreciate it. It does help out the channel. Helps both Rocky's channel and my channel, which is fantastic. I'm just glad I can help out Rocky, who's an up and coming. I know he's going to be a fantastic YouTuber soon. I do have his channel pinned at the top here for anyone that's liking the analysis that you are seeing from Rocky Finance. He's fantastic. I think he has, strong long-term potential. I'm talking about him as if he's a stock, but he's a valuable stock, guys. Rocky is very valuable. I think, again, what he's been doing on the Discord. Currently, we're sharing the Discord together, so if you haven't joined us, feel free to join us in the description below. But again, his channel's pinned up top, and I'm going to rename it to make it a little more obvious. But Ocugen, OCGN. Let's definitely talk about it, John, because guess what? They just got EUA, and we know that they're going to potentially be producing products here in 2021. They have the new vaccine coming out for C19. And of course, with that being said, increased revenues, and we already have EUA in India. We know that. It had this initial squeeze that was just insane in February. It was targeted. We know 100% targeted by the Wall Street Bets community, as well as a lot of our healthcare stocks. For some reason, healthcare was chosen as, the big focus, which is kind of odd to me, but, that's how some of these groups work, which is pretty cool. I mean, it really benefited a lot of us, especially if we set our trailing stop losses. But Ocugen came down. It crashed pretty heavily. It hit, $8, but look what's happened since. Up 9.25% as of the 25th, so in the last week or so. And then from there, in the aftermarket, just in the one-day chart, came down to about 753, up 31%. So again, with Ocugen, let me just pull up their website quick. As I mentioned it, I covered it on my channel. Again, for the products that they have, the vaccine rollout is the big thing. They're the first company that's making a non-mRNA vaccine, which is huge because a lot of people are skeptical about getting the vaccine since it's an mRNA vaccine. In my opinion, I think it's safe. Again, not medical advice, but in my opinion, for my own parents, I told them to get on the wait list because here in the United States, we currently still have a wait list active because there's just such a high demand, and we're trying to roll out, based off the CDC's recommendation. So we're slowly but surely working through it. But Covaxin, a whole viron inactivated C19 vaccine for the US market. So recently just got approved to start hopefully getting some doses in here in the United States. So if anyone knows what that does to any company, vaccines aren't cheap, but especially here in the US, with the vaccine rollout, the big thing is going to be that they're going to get their products out in the US. So you can see they've had EUA in India for development as their development partner. So they've been administering this one in India. Phase 3 in progress in India by development partner. So, and then US EUA pathway in development. So recently actually got approval. So we're gonna see this company have some very, very massive revenue gains for Q2. Pretty much Q2 2021. That's my prediction. So as you can see, people might start electing and choosing to get this one over some of the other products because again, it's a non-mRNA vaccine. It's an inactivated viron C19 vaccine. So the different formulation will open up eyes of others because these are more things that we're familiar with historically speaking. mRNA vaccines like Pfizer and Moderna aren't ones that we've seen. So Ocugen, again, I think it's going to have some pretty strong potential in the short term and, of course, in the long term. So keep this one on your radar for sure, everybody. We'll have Rocky, of course, do some charting on it. But look at this. It really had a bounce. And if you look at even the 1 year, this was nothing but a 25-cent stock. It was literally, no one was looking at it. Because, again, their products are in the pipeline. If you look up their pipeline, very early on, like IND enabling, like preclinical, they're not even in phase 1 or phase 2 trials. So this company, for their products that are in their pipeline, probably won't be making revenues for years and years to come. But the fact that Covaxin got approved, got EUA, emergency use authorization, that's pretty big news. So that's what caused it to go up. Look at this. I can't imagine. Imagine putting $1,000 in September, and now you have $50,000 beginning of February. Even now, still, you've made a 27x return. Crazy town. But that's pretty amazing. But regardless, let's have Rocky kind of talk about his take on Ocugen, what are potential good buy opportunities or buy zones, because right now it did have a pretty significant pullback, even in the short term, about 33% like everything else.
All right, so let's get into OCGN. Obviously, yes, I do agree that the vaccine did change a bit of the stock price. Good PR on that, actually. Good PR on that. So we see these long-term breakouts, and there's the short-term breakdown towards the downside. Had some support at $5, $7, and at $9, but then ultimately broke those support. But currently, OCGN establishing a buy opportunity in the $7, sub $8 levels. Great opportunity to buy in. Resistance is at $9, but also then again, also there's this $8.33 level I'm looking at. So yeah, pipeline is not that bad. That's my analysis on OCGN. Pretty bullish.
Pretty bullish. I love it. Appreciate you, Rocky. Thank you so much for your quick analysis on OCGN. Guys, what I'm gonna do quick for anyone that's on the stream, gotta show my friend, my brother, Rocky Finance, some love on his channel. So let me take off this initial pin that we've had. Oh, and real quick here, let's see what Justin said. Thank you so much for the super chat, Justin. He says NAOV uses SAW technology, not BAW like Zometica. Was on Zometica at 7 cents, and my price target was $3 for the first run. Price target is $50 for NAOV, long-term product launch next March. Interesting they have a March launch as well. So let's pull up NAOV, but before I do that, I do want to put up Rocky's page in just a second. NAOV stock. So I'll leave this one up for a sec. We'll definitely cover it. And again, thank you, my friend, for the super chat. It does help out the channel quite a bit. So again, NAOV, but quickly here, let's put up youtube.com, Rocky Finance. Gotta show Rocky some love. Whoops. Rock Finance? No, that's not his name. It's Rocky Finance. Don't make the mistake. So as you guys can see, his channel is growing, and it's definitely deserved growth. He has been really killing the game. He's been covering AMC guys, been covering Zometica just like myself, CTRM, a lot of penny stocks. And the thing that I really like about Rocky's channel is if you go back far enough, you'll see that he's covered stocks. Like he said, BNGO at 80 cents. He's covered some of these stocks before anyone else on YouTube would mention them. And we can't
also at 40.
What's that?
Ocugen at 40 cents. Cover that.
So the guy might have some he might have a crystal ball or something in his disposal. So again, he's covering a lot of the stocks we're talking about today, months and months ago, before any of this unprecedented run up has occurred. So Rocky Finance, I'm going to repin his channel on the Discord here. So let me just put it for you guys. Rocky.
Also, thank you all for all the love. Really appreciate it. Let's have a great 2021. Bullish on my channel.
All right, let's see what we got. Let me pull it up in here. Rocky Finance. There we go. And pin. There we go. All right, now let's keep it going. I have time probably to cover 2 more stocks because I do have a lot I have to do today. So let's quickly see what you guys have to say for some of the stocks. So we talked about we're going to talk about NAOV. So NanoVibronix Incorporate. So this is one that Mr. Justin Rengland brought up. So again, Justin, thank you so much for bringing this one up to our attention. We'll look at the 1 year. Okay, so it hasn't had any type of short, ridiculous run-ups at all. Came down to about a 58-cent low, ran up about to 160%, like a lot of things did, and now it's pulled back to about $1. 95 cents in the aftermarket. So with this stock here, I mean, again, just looking at its basic chart, looking at the 5-year, looks like it hit about 725, came back down. So let me put up their website. Innovative medical devices. So let's see, ultrasound therapy devices. Waves in Motion NanoVibronix develops innovative ultrasound therapy devices based on its proprietary therapeutic ultrasound technology. Our products employ small disposable transducers that transmit low frequency, low intensity ultrasound acoustic waves. So again, we know a lot of different diagnostic type therapies use that kind of technology. These devices address a range of clinical applications, helping eliminate pain, repair regenerative tissue, musculoskeletal, vascular structure, and okay. So again, a diagnostic company. Let me see. I'll go on their investors tab quick. Not a company that I'm very familiar with, so I haven't heard much about this one at all thus far. Q4 earnings have not been reported quite yet, which is okay because again, people aren't really chasing earnings reports for some of these smaller cap companies. Let's just quickly glance at their balance sheet, I guess. Why not? So looks like their cash and cash equivalents has went up from 2019. Not much cash on hand, but again, I don't know what their R&D expenses are and everything like that. Presentations. Let me look at let's see if they have their investor presentation anywhere. Check updates for updates soon. Well, looks like they don't have. Okay, no images of their which is fine. I mean, pictures don't matter necessarily, but it just kind of strange. Missing investor presentation. Maybe it's because it's such a young company. Not a lot of people are looking at it. Doesn't have much information on their balance sheet. Mr. Murphy has served as their chief. Murphy has 25 years. Yeah, so I'll look into the company. It doesn't seem like, again, just looking at, I like to first know what they're trying to do. So it looks like pain management, wound treatment, and urology are their applications. So the ultrasound therapy for pain, no drugs, no side effects, no surgery. So with ultrasound therapy, there's TENS units currently in the market. So again, they use basically waves to send stimulus to a certain area of pain. So with that being said, again, it could very well, be a product that has some superiority to some of those that are currently available. But I know some people who I've dispensed these kind of systems for, similar systems for pain management. So yeah, I mean, again, I don't see too much about it. Maybe we could look at the technicals, because I'll definitely do my research on it for wound healing. Looks like they have products for urology. So again, very focused on this whole ultrasound, which is very interesting to me. I want to definitely know more. The Euro Shield prevents biofilm formation, decreases UTI and bacteriuria. Wow. Reduces catheter pain and discomfort, increases antibiotic efficacy. Super interesting. I'll definitely look into this one, but again, the balance sheet, nothing too significant. I don't see much money in the company, obviously, because they're very, very new and small cap, which I don't expect much for. But the fact that, more has to be done for their website for sure. But I want to see an investor presentation. I think that's always one of the number one things. So unless you have access to that, maybe you could share that with me. But again, when I just click under their company info, please check back soon for updates. They don't have anything here. So let's have Rocky quickly just take a quick glance at NanoVibronix. Ticker symbol is NAOV, sitting at $1.02 and 95 cents in the aftermarket.
All right, let's do some quick run-throughs through NAOV. Originally has a moonshot to 232 on some probably press release. Obviously, not a lot of news recently. Earnings, not enough people reacted apparently to that. But currently, the stock is downtrending. It needs some news, but with the whole market pullback, I think people are going to push this towards $1 again. Current supports are at 83 cents and 90 cents. So if it does fall back to that, look for a buying opportunity if you're long-term invested. But, as Ahmed said, I don't know much about the company. But
right.
Yeah, if it breaks through this $1 level, looks bullish. But yeah, also, I see people in the chat commenting about TNXP. So yeah, thank you, DK. Let's get into that real quick. So TNXP, I'm pretty sure they have a vaccine up and coming for the pandemic. Let's just check it out real quick right here. So I'm seeing some support at this $1 range. And then obviously if this breaks is trend line right here, this looks bullish. So a break of 110 on TNXP looks very good. I'm gonna keep this stock on my radar. So yeah, just two analysis.
Cool. TNXP, one that I'm not familiar with actually, but I can definitely look into. Let's look at quickly before we move on from NAOV. I want to see if it has any analyst price targets or anything on their radar, which doesn't look like quite yet. Okay, so again, NAOV, thank you for bringing it up today. We'll definitely take a closer look at it, Mr. Justin. And again, appreciate the fact that you brought it up on the live stream. All right, maybe time for one more last stock for the day. I kind of went over my 60 minutes by a little bit. I told myself an hour. Last stock. Let's see if one person...
Should we get into AMC and GameStop?
Oh, should we do AMC and GME?
Let's do it. Let's do it.
Let's do it then. All right. The meme of memes.
Yeah. All right. So I'm going to get into charting real quick. Let's get into that. So I do have a rough charting. Are you on the chart for AMC? Okay.
Yeah, I'm on your screen. Yep.
Okay. So AMC is pretty rough recently. There's a lot of varieties how it can be taken, but obviously there is some news. So let's get rid of these little trend lines right here because it did break. There's news that AMC theaters are reopening for those who are trying to be part of AMC. And yeah, there's just some support. Really not much movement during the market pullback. But let me just say, AMC is a strong stock. As you see with other large caps like Tesla that pulled back 10%, AMC's pretty much pulled back about 8% or 5%. It's not huge, but it shows that there is bullish momentum on AMC still. And with the call option and the option flow, AMC is still looking bullish. So there's not much bearish territory to be had unless the company drops an offering to release some debt like they have done earlier. That's what I like about AMC. They release some debt. But yeah, a lot of people, saved AMC. But yeah, taking a look at the price action, AMC resistance is currently at $8 after it being broken, 868. And there's support at 795 that's been tested multiple times. This is a quick analysis on AMC. We're looking for a break near March, but it didn't happen. So with this whole GameStop, still moving, I still see AMC, a trajectory toward $10 is still possible within the next few weeks.
All right. So there's AMC, guys, from Rocky to cover for everybody. But yeah, no OTC market stocks, of course. I'm personally anti. I know I lose on a lot of opportunities because I don't invest in the market, the OTC market. But regardless, it's just not something that I do. But again, before we end the stream, one last look at ticker symbol ZOM for people who joined in late. Zometica, guys, again, for next week, we are potential good buy zones. If it reaches anywhere near the 140s again, we know what's happened in the past. Both times it's dipped in that area. When we looked with Rocket, actually triple support lines right at there. It's hit, or I should say, it's hit the support line 3 times right on $1.40, $1.38 to $1.42-ish. So if you're looking to get more Zometica before the launch of the True Forma, it might be time to consider so if it ever pulls back to that range. For everyone else, if your cost average is high, consider averaging down. Not a bad idea. And we're playing this, as I mentioned early on in the stream, we're playing Zometica as so. Buying now, right? Bought in at 40 cents originally, and looking to set our trailing stop losses before the launch of the True Forma. I can almost guarantee that it's going to pull back. Of course, I can't predict the future, but that's just my assumption because a lot of people sell the news. True Forma launches, a huge sell-off, then we pounce, get back in, buy the dip, and hold long-term in our main portfolios and not look back for years and years on end. All right, everybody, that is our take on Zometica, our take on all of our different things. Quickly, you can look at Rocky's smiley face trading view. So Rocky, if you want to quickly just talk about quick technicals about Zometica before we end the stream.
Sure thing. Thanks for having me on. Zometica, once again, support lines are as discussed. Typically that 140 area looking like it bounces off there. So anytime Zometica dips 140, say you add an alert there saying, oh, Zometica's at 140, not bad to add on this stock, right? You see these confirmed support areas, and if Zometica breaks out soon, it needs $2 to break out. So that's a short-term price, analysis on Zometica. Overall, not bad. Really bullish, as you see, 100 million volume traded shares every day in the market on average. So you see something is up with Zometica. I don't think, Zometica is weak at all.
Absolutely, absolutely. All right, and again, everybody who has joined us on a live stream, I thank every single one of you. Yes, lock in profits, as Salim says. Thank you so much for your words there. Lock in your profits, folks. Always remember, that's the biggest thing we learned. Thank you for tuning into the live stream today, everybody. Again, I have Rocky's Finance, his channel, linked right at the top. So if you want to follow his wonderful technical analysis that he does on his channel, please click the link in the top of the chat there. Feel free to join in on his channel. He's a guy who covers stocks in a way that I don't think many do. His technicals are always on point, gets you in plays early before anyone else does on YouTube. So until next time, everybody, thank you so much for tuning in. We'll get a last word from Rocky before we close down.
Hey, thank you all so much for the support and tuning to the stream Sunday. I know many people love to relax on Sunday, but you viewing the stream, helps a lot, supports the channel, and obviously you're going to learn a lot more about stocks, and hopefully we got a lot of requests done. And I really enjoyed being here, so thank you all.
Yeah, and I'm hoping to do this maybe as a weekly thing with Rocky as both of our channels continue to grow. And again, I can't thank every single one of you enough. If you're doing this on a Sunday, the big thing is you're trying to learn more. You're trying to become better with your trading. You're trying to get better with understanding the stock market, and that's a big part on you. So I appreciate you for that. Join us on the Discord if you want to talk more. And until next time, everybody.